The list of countries exploring a central bank-backed digital currency is ever growing, with the Philippines the latest to join the pack. Welcome to the Daily Forkast, March 8th, 2022. I'm Angie Lau, Editor-in-Chief of Forecast, covering all things blockchain. Well, the Philippine Central Bank has announced plans to develop a central bank-backed digital currency, but what advantages could introducing a CBDC bring to the country's economy? Well, we're going to take a look at that story, plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Well, let's start with a look at the latest from the crypto space on Russian financial sanctions. Coinbase has now blocked 25,000 Russian crypto wallet addresses. The NASDAQ-listed exchange has revealed that the wallet addresses believed to be associated with Russian individuals and entities engaging in illicit activities are on its block list. Now, Coinbase says it will not be imposing a blanket ban on all Russian addresses. However, it says it is committed to complying with sanctions. Now, the U.S. has asked crypto exchanges to comply with Western sanctions to apply further financial pressure on Russia. And the world's biggest crypto exchange, Binance, says it too is working to comply with sanctions while minimizing impact to innocent users. The Russian-Ukraine conflict is the first war in the age of cryptocurrencies, and never before the promise of transparency, accessibility, and security that digital currencies offer has been more important as people try to protect their money. Let's chat more about the role decentralized finance is playing in the conflict with Kelvin Lam, CEO of Lithium Finance. Welcome to the DeFi Download, Kelvin.
It's good to see you, Angie.
It's good to see you too. I mean, it's just about every big crypto coin that we're talking about, from Bitcoin to ETH, Avalanche to Polkadot. It's seen a sharp rebound since the conflict in Europe started. What is the main reason here?
Well, it has certainly been volatile. I think at the beginning of the conflict, we've seen increased trading volumes in Ukraine as people rush to convert their assets into cryptocurrencies. Basically just to get around with restrictions and challenges and getting their money with that. I think we had also been seeing speculative trades, betting similar spikes will happen in Russia as people demand for crypto would increase given sanctions come into play. That anticipation, however, seemed to not have materialized to sustain. So as we speak, we are seeing crypto markets coming back down a bit to be more in line with the overall risk assets.
And it really is that risk even in Russia. For the Russian people, they're finding themselves cut off from the global financial system. Russia as a country as a whole is certainly exposed to that. The Russian currency has plunged in value even as Putin has put capital controls in place. Do you think this upward trajectory of crypto assets would continue as the conflict drags on?
It's important to remember we have a few things going on at the moment. Obviously, we have the conflict in Eastern Europe. We also have the seemingly never-ending COVID situation in the middle of a rising interest rate environment. With all that, I am still quite hopeful for a continuing upward trajectory, as you mentioned, in the medium term and hopefully well into the longer term. But that's not going to be because of a prolonged conflict, and certainly not because of tapering. It's always, I think, fundamentally going to be driven by mainstream adoption and expanding utility. What's interesting, I think, is that with the current conflict, we have been seeing headlines in mainstream media about crypto almost every day, which puts crypto into new perspective for the general public. Ukraine has been accepting donations and deploying funds and digital assets. People are wondering about sanction non-compliance, and many have just realized the practical use cases and reliability of the blockchains.
There's certainly debate raging right now, concerns that cryptocurrencies could be used to bypass the sanctions that U.S. and allies have imposed. Given the DeFi protocols in place, could Russian oligarchs, for example, use DeFi to protect their assets, realistically speaking?
There has been a lot of debates in that area. I personally feel that is not a practical solution for them, primarily because all the transactions on blockchains are fully transparent and traceable. For example, if a sanctioned person has any offshore interest or repayment obligation, it would be very unlikely for any agent to facilitate that on behalf of that sanctioned person through blockchains without getting tracked back to himself. So although the blockchain will be open, it's a viable channel, it's going to be very, very hard for any large movements to go undetected. As for the ordinary Russians, however, who are not subject to sanctions, I think crypto could actually become more useful for them. It will be possible for them to use crypto to get around the inconvenience, if you will, resulting from sanctions placed on their bank, but not themselves. So again, I think it's going to be helping a lot of these mainstream users to realize the benefit of crypto in legal and compliant ways.
It is a new age indeed for cryptocurrency, and certainly applications of it in real time. Thank you so much, Kelvin, for bringing some insights into the DeFi download today. Well, in other developments elsewhere in the world, and on a lighter note, Hong Kong's South China Morning Post has launched a Metaverse experience in the Sandbox. The more than century-old newspaper opening up in the Metaverse, open until the end of the month, users will be able to explore historic moments from around Hong Kong's iconic Star Ferry pier. Owned by Hong Kong's Animoca Brands, we're talking about the Sandbox here, it's been making efforts to boost the city's presence on the Metaverse, as well as reflecting Hong Kong's culture. And the move follows Hong Kong's second largest theme park, Ocean Park, announcing just last month that it would be building virtual attractions in the Sandbox. Well, if you can't visit Hong Kong in real life, there's always the Metaverse, right? You can find those stories and more at forecast.news. Well, back to the physical world now from the Metaverse, so to speak. More and more countries are expressing interest in rolling out a central bank digital currency, or CBDC. The latest to announce its plans to introduce a CBDC is the Philippines. But will a country with a population that remains heavily cash reliant and not banked welcome this development? Forecast's Jenny Ortiz reports from Angono, Philippines.
The tides have turned for the Philippines as its central bank has announced a plan to pilot a central bank digital currency research initiative called Project CBDC-PH. The announcement comes a month after the central bank said in an interview that it had no plans to introduce CBDC in the near term. But in a more recent speech, Philippine Central Bank Governor Benjamin Joknos said they will pilot the project as CBDCs can support the implementation of the government's targeted cash assistance program. He added that it could provide substantial benefits for the Philippines, a country with an economy that relies on remittances from the overseas Filipino workers. Philippine-based Security Bank Chief Economist Robert Dan Rosas told Forecast that there are two major economic benefits for the country from the plans. First is the promotion of financial inclusion, as a CBDC will provide an alternative means of financial transactions. And another benefit is that it will allow for new options for monetary policy. But are Filipinos themselves ready for the digital currency? Rosas says a CBDC may be a different flavor for the average consumer who may still prefer to be able to draw old-fashioned cash when needed. For Forecast, I'm Jenny Ortiz, Angono, the Philippines.
And that's the Daily Forecast, telling you what you need to know about the blockchain world from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.